my last point on this, because this is, as you can imagine, someone young starting the business is a sensitive topic, because I've been staring down that conversation of, hey, you need to put $1 million in. It's like, I can show you my PFS. I don't have $1 million, right? And those have always been fun conversations. But I think let's just take a step back, right? Why do investors want a co-invest? Well, they want alignment of interest, right? They want them to know the sponsor's bought in. And absolutely, a sponsor putting cash in is definitely a display of alignment of interest. And then to your point about fees, right? If you see a sponsor come to the table and say, hey, I don't really care about negotiating my promote. I just want to charge a 3% acquisition fee. That's
enlightening. Yeah.
Yeah, exactly. That's enlightening.
Not in a good way.
Not in a good way. So those things are obvious, but I think if you can't diligence the sponsor from a character standpoint, qualitatively through conversation, interaction, Zoom calls, dinners, drinks, it's like, I can't imagine a situation go, well, this sponsor didn't really pass the smell test when I went to dinner with him, but he's offering a big co-invest and lowering his fees, right? To me, that doesn't make sense.
No. Yeah, we would agree. I mean, the sponsor or the borrower, depending on, what side of the house you're talking to, is the key, most important thing we're looking at. The real estate it's secondary, because if you have bad sponsorship or a bad partner, I don't care how great the real estate is, like, it's not going to save that venture, especially if you find yourself in difficult economic times like we are in right now for real estate. And so that's the most important thing. And I'm hyper protective of my own reputation and obviously of Pearlmark's as well. And I think that's key. And for anybody that's listening, that's maybe earlier in their career, that would be my biggest advice is do not burn bridges. Like, do what you say you're going to do, work hard, and you'll do just fine. But if you don't want to be, because you get one chance to screw that up, and once you have, then I don't think you'll find a very long career in this industry.
Without a doubt, and I think just making sure that you're doing the right thing at all times, and protecting that and making sure that you treat the people correctly is ever crucial. Which brings me to the next question, which is, what do you typically look for in a sponsor? Do you need to see a certain amount of exits? Be curious to know how Pearlmark kind of views that, because you just mentioned it could be people that just found a unique opportunity, but it would be tough to kind of willy-nilly just somehow cold email you guys a deal and have you guys get any attention. But just be curious to know what you do look for in a sponsor and kind of how that works out.
Yeah, so I think the first thing we're keying in on are who are the decision makers and what is their expertise and their background and their track record. So I don't think that it needs to necessarily be a deep track record that they personally can vouch for as their own, because not going to come as a surprise that particularly if you're in an institutional firm, you don't often own that track record. It's ascribed to the company that you work for. So you could be in a seat like mine for a decade and do all these great deals, but if you choose to leave and do something on your own, you may not get specific credit for that, because that may be deemed, that was part of your time at Pearlmark, et cetera. So I don't spend a ton of time worrying about that. What I want to hear about is, where do people get their start? Why are they in real estate? What have they spent their time doing? How do they view real estate? How do they view risk? And frankly, I think some of the most important questions and the ones where you learn the most are asking people how they handle, issues within their track record or in their history. Because, if you've got a deal where you're seeing, 5% rent growth every year and, your debt's fixed and, occupancy stays super healthy, like, there's not a lot to talk about, right? Like, okay, great, you found a good opportunity and you rode the market cycle. Good for you. But it's the situations where, you had misalignment in your interest rate cap and your debt maturity, and interest rates went up by, hundreds of basis points over a 12, 18-month period, a la the situation we just are coming in and frankly still living in. That's where you get to learn about how people handled the situation, like how active were they and how transparent were they with the bank? How did they get, if they needed additional capital to bring into the venture, how did they do it? Did they have the relationships and the expertise to go out and find that in an efficient manner? Were they transparent with the issues that were facing the project? And so we'll do reference checks. We'll sit down with principals. Before we do any deal, it's incredibly important that multiple members of our investment committee have sat and been with the sponsorship groups. And usually that's breaking bread together and multiple project tours, and hearing their stories. And if that comes back clean and we all feel like we've got a good check on them from that perspective, then we'll make the phone calls. And then lastly, we'll run the background checks to make sure that there's nothing nefarious or anything like that. But usually you're able to suss out problems well before you get to anything like that.